We are talking all about private equity with Ashley Gardyne, the Chief Investment Officer at Fisher Funds. He's here to talk about why the fund is moving forward with allocating more than $1 billion into private equity, with some of it earmarked for New Zealand businesses. Ashley, good morning.
Good morning.
First of all, what is private equity?
Your private equity is simply investing in companies that aren't listed on the stock exchange. If you think about your typical KiwiSaver investment, it could be a listed company that's listed in New Zealand, or perhaps the New York Stock Exchange or the NASDAQ. But a lot of New Zealanders, actually most New Zealanders, work for private companies. There's lots of great private companies that aren't yet listed on the stock market, and private equity is all about getting access to that. A good example of a New Zealand company you'll know that's owned by private equity at the moment is TradeMe, so that's just one example. Okay,
so why is Fisher Funds investing in private equity?
Yeah, the primary reason is to get higher returns, and there's a long history of private equity delivering slightly better returns than listed markets. And if you look at the trends overseas, we've seen pension schemes, but superannuation schemes in Australia, for example, for the last 2 decades start to look at private equity. And it's because they see that extra return potential. So a little bit of extra return on private equity in a broader KiwiSaver scheme could add an extra 0.5% to your KiwiSaver return every year. And it might not sound like very much, 0.5% a year, but over a 40 or 45 year saving life, that could result in another $100,000 in retirement.
What do you think it is about it that gives it that potential for the extra return?
Part of it is because it's private, it's unlisted. There's a little bit more risk because of that. It takes 5 years to sell it, but at the same time, there's more you can do with those businesses as well. You can help those businesses grow, you can incentivize them in the right way. And many of those businesses are just a bit smaller and newer in their journey, so there's a bit more growth there.
Okay, how much are you looking to invest in private equity?
We're looking to start with about $1 billion over the next 3 to 5 years. That will be between global investments with global private equity managers. But we've also earmarked about $300 million to invest directly in New Zealand companies here, which is really exciting. We think there are some really good companies in New Zealand, and we're looking for great founder-led businesses that have been profitable for quite a while and have ambitions to grow and just need some more capital to do that.
You mentioned the word risk before.
Yeah.
How much riskier is it than investing in the stock exchange?
Yeah, I think it's important to realise there's risk with both types of investments. Stock exchange investments tend to be more volatile, but then private equity come with sort of different risks as well. But both of them work quite well together side by side in a balanced portfolio, and that's why it's important to have balance between the two. But you do have to take your time and be really patient when you're looking for private businesses. You want to make sure you do your detailed research and due diligence before you get involved. Ultimately take board seats so you can have some governance and oversights of those investments. But when you look at the risk versus return potential, it's all about balancing it up to try and get the best long-term outcomes.
How difficult is it to back a winner and to pick a private business that's actually going to do well?
Yeah, in terms of picking businesses that do well, it probably depends on the part of the market you're in. Venture capital is a bit harder. These are really high growth companies that are a bit more speculative, whereas private equity, and particularly things we're looking at, are definitely down the more mature end of the spectrum. So companies that have been around for 20 years, have a long track record of growth, have some sort of competitive advantage. That's more akin to picking just a general stock in the stock market.
Ashley Gardyne from Fisher Funds, thank you so much for joining us this morning.
Thanks for having me.
All right, kia ita tonu mai.